So you are ready to buy a home, but what you need is money for a down payment. Well, North Carolina offers 3 programs that you may qualify for. I'm going to explain how these programs work, how you can qualify for them, and how you may be able to combine them together. And if you're thinking of moving to North Carolina, we have great EXP agents all over North Carolina that'd be happy to help you. Just reach out to me. So the first program I talk about is called NC Home Advantage Mortgage. So what this program offers you is a stable fixed mortgage and up to 3% of the loan amount for your down payment.
Wow, that sounds like a really good deal.
So just to break it down for you, let's say you're looking at a house that's $200,000. 3% of that would be $6,000. So they will offer to pay up to $6,000 for your down payment. The house you're looking at is $300,000. They will possibly pay up to $9,000 in down payment assistance. And beware, full disclosure, because you're borrowing this money from the state of North Carolina, if you decide to sell your house, refinance your house, or have someone else assume the loan for you, you could be required to pay this loan back within 15 years or less.
Well, that sucks.
After 15 years, you don't have to pay it back. So let me break that down for you, and I'll use the same example I used earlier of the house being $200,000 and the down payment of being $6,000 because it's 3%. So let's say you decide to sell your home after owning it for 5 years. Because you brought $6,000, that's $400 a year times 15. So if you were to sell your home today, you would owe $4,000 back to the state of North Carolina because $2,000 of it is already fallen off because you sold it at 5 years. If you sold it at 10 years, you would only owe the state $2,000 back for your down payment assistance. Now, if you own the home for 15 years or more, of course, you do not require to pay back this loan now. The website does not mention anything about renting out your home. So if you decide to rent it out and upgrade or downgrade, that could be an option at the time of this video.
I like the way you think.
Now to find out if you're eligible for this program. So to be eligible for this program, you must be purchasing the home in North Carolina. You must occupy the home as your primary residence, principal residence within 60 days of closing. So it cannot be a rental home. It has to be your primary residence. Your annual income cannot exceed $126,000. Your credit score must be 640 or higher. If you are applying for an FHA, USDA, VA, or conventional loan through a participating lender and meet the sales price limits of the loan type, you are a legal resident of North Carolina.
That's a lot of information.
So what homes qualify for this program? It could be a single family residence. It could be a duplex. It could be a condo. It could be a townhome. And it could be a new manufactured home, but you must have a 660 or higher in credit score for a new manufactured home. Beware, it did not say anything about mobile homes or modular homes or older manufactured homes. The second program I talk about is called NC First Home Advantage Down Payment. So if you're a military veteran or a first-time buyer and you qualified for the first program, you may be able to get up to $8,000 in down payment assistance along with the first program, NC Home Advantage Mortgage. Wow. Just so you're aware, because you are borrowing money from the state, if you try to sell it, refinance it, or have someone else assume the loan for you, you could be required to pay back the money that they let you borrow.
Blah, 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 blah.
Same criteria applies. If it's 15 years or more, you don't have to worry about it, but it's less than 15 years, they're going to deduct 20% every year. And just to break it down for you, you take $8,000 divided by 15 is roughly $533 a year. So if you decide to sell your house at 5 years, take 533 times 5, which come to $2,665, deduct that from the $8,000, you would owe the state $5,335 at 5 years. And of course, as the years add on, just deduct 533 roughly. To qualify for this program, you must be a first-time buyer or a military veteran per year. And you are also considered a first-time buyer if you've not owned your principal home or in the past 3 years. So in other words, if you bought a home 4 years ago, you could qualify as a first-time buyer again. If you owned your primary residence 3 years or less, you cannot qualify for this program.
What you talking about, Willis?
If you are a military veteran or buying in a targeted census tract, you meet the income and sales price limits. Home in North Carolina, you occupy the home as your primary principal residence within 60 days of closing. Your credit score is 640 or higher, and you are a legal resident of the United States. So what properties qualify for this one? It's going to be single-family homes. It's going to be townhomes, condos, new manufactured homes, but you must have a 660 or credit score for these. Be aware, duplexes and new or used manufactured homes, modular homes, or mobile homes are not included in this. And the third program I talk about is called NC Home Advantage Tax Credit. Now, this is eligible for first-time buyers who have not owned their primary residence for the past 3 years, and for military veterans. This program could save you up to $2,000 a year on your federal taxes with a mortgage credit certificate, or MCC.
Let me tell you how it works.
If you qualify and claim a federal tax credit of 30% of the interest rate, you can pay an existing home 50% or newer built home up to $2,000 per year for every year you live in the home. So in order to take advantage of this tax credit, you must apply for it and be approved from the mortgage credit certificate before you purchase a home. So for example, let's say you owe $148,000 on your home and your interest rate is 4.5% every year. That roughly comes to $6,660 a year you owe in interest. You times that times 30, which gives you $1,998. And that's how much of a tax break you are allowed to get that year. And also that 70% that's left over, you can still claim that also as a mortgage interest deduction that you paid this year.
God, I am liking this.
And another great thing, you don't have to wait till tax time to take advantage of this tax credit. So once you add everything up, you can go to your employer and change your W-4 and have it deducted from your federal taxes every month. And this is how you qualify for this. You're a first-time buyer, home buyer, or military veteran buying in a targeted census tract. You meet the income and sales price limits. You're purchasing a home in North Carolina. You apply and are approved for the MCC prior to your home purchase. Remember I stated that earlier. You occupy the home as your primary or principal residence within 60 days of closing. Your loan is reviewed and approved by the NC Housing Finance Agency prior to closing. You are a legal resident of the United States. So what homes are approved with this tax credit? It's going to be single-family homes. It's going to be condos, townhomes, and new or used manufactured homes. And you're not required a 660 or better credit score. If you enjoyed this video, please check out this video right here where I talk about the home buying process in North Carolina. And if you have any questions about these down payment assistance programs, please reach out to me. Love to explain it more to you. See you guys in the next video.